India's only show on corporate law, tax and audit matters.
Hello and welcome to The Firm. On the show this week, the use of a colorable device, the promise of assured returns and dishonest defences. It's a potboiler with a tragic end. And how India's Whistleblower Protection Act offers less protection now. Well, the assured return chickens have come home to roost. Our top story this week may be good news for Indian companies, but it's every foreign investor's nightmare. Netherlands-based foreign investor FMO wanted to invest in a slum rehabilitation project and an industrial park, both being developed by subsidiaries of real estate company Hubtown. And FMO wanted an assured return on the investment. But RBI policy permits only foreign equity investment in such projects and does not permit assured returns. So to enable FMO to circumvent RBI policy, an intermediary company, Vinca, was set up in which Hubtown owned 90% and FMO purchased 10% and 3 compulsorily convertible debentures for 418 crores. Now, these CCDs were convertible within 60 months starting December 2009. Upon their conversion, FMO's stake in Vinca would increase to more than 90%. Vinca used FMO's investment to purchase optionally convertible debentures or OCDs yielding 14.5% per annum and issued by 2 of its wholly owned subsidiaries, Rubix and Amazia, the companies that were developing the slum rehab project and the industrial park. This direct and indirect investment by FMO was guaranteed by Hubtown, and the agreements were structured to give FMO control over any decision regarding the OCDs. When the OCDs defaulted, FMO asked for its money back, but to no avail. It invoked the Hubtown guarantee, and that failed too. Hubtown plain refused to return the money. It argued that the structure was and is not lawful and is opposed to public policy as it was designed to defeat and would defeat the provisions of law, the FEMA regulations read with FDI policy. Bombay High Court's Justice Kathawala agreed with Hubtown. He observed that interposing Vinca was only a colorable device designed to enable FMO to claim and receive back its FDI investment and interest thereon. The complex structure devised for FMO's FDI investment establishes that all parties were aware that the transaction, which was premised on return back of the FDI amount along with a fixed rate of return thereon, was not permissible or in violation of the FDI policy and the FEMA regulations, and that neither IDBI nor FMO can seek the assistance of the court to effectuate or implement such a prohibited transaction. Well, to discuss this very interesting case, I have with me Abhijit Joshi of Veritas Legal and Sandeep Bhagat of SNR. And gentlemen, to both of you, a warm welcome. I want to get done with the technicality of the value of this decision first, simply because this is not a final order. It is a summary order, if I can put it that way, or an interim one. So what would you say about the binding nature of this order and therefore how it would apply, let's say, to similar structures?
So I think the judge at this stage was simply making a determination whether or not there are issues here which are trialable and whether the defendant has raised enough issues to go for trial.
Right.
And I think the judge expressed a view on the structure, etc., but ultimately concluded that, look, this is a case where the defense has raised issues, and I think there are issues here which need to go to trial. So I think ultimately there will be a full hearing about this.
Right.
And these are observations which the judge has made, and whether or not the subsequent court determines to look into this is going to be entirely.
So whether the outcome of the trial is similar to the observations by Justice Kathawala, none of us can tell. Therefore, how much, I won't say importance, because of course it's a judge saying what he is, but what would the binding value of this be? What would this mean for, let's say, other structures?
Persuasive, but not really binding.
Abhijit?
Yeah, so it's an interesting question because while the judge has actually given prima facie views, he has agreed with Hubtown that it is illegal and unenforceable. He says that this has to be tried within 1 year.
Right.
Having said that, completely oblivious of the fact that the regulator might pick it up because the observations are, though prima facie, quite clear and may start its own investigation. So in that sense, binding or not binding, but it's damaging, and therefore we have to see whether an appeal is preferred, whether any application is made.
An appeal to this interim or summary judgment, if I can call it that?
Yes, that is one. And two, when an application is made to strike down these observations pending trial, because the regulator might pick it up. They may not lie low for 5 years and say that we'll wait till the trial, until such time we'll ignore the observations of the judge, which are quite clear.
Okay. Yeah, I think we've known for a long time now that assured returns are not permitted when it comes to foreign direct investment. So if a court is reiterating RBI's policy, there is nothing really surprising about that. It's simply just saying this is what the law is or the regulation is. But it's interesting how Justice Katawala has looked at this series of transactions, first in Vinca and then the subsequent investments in the downstream subsidiaries, and said that at this point in time, if you're asking for your money back, that amounts to an assured return, and therefore that cannot be permitted. Would you agree with his assessment of the transaction in itself, the fact that there is a colorable device being used and the fact that this amounts to something illegal?
So it's if the facts have to be viewed, it's a 2009 case.
Yeah.
That time the evolution of downstream investment and the policies on that were evolving. The evolution of owned and controlled entities, foreign entities, and therefore whether Indian
entities... It was very new, if I remember the press notes, 2, 3, 4, 5, yeah, exactly. I can't remember if it was before or after
the facts has to be tested as the law stood then. If you take the law now, I think there is a lot of clarity on the subject, and it has culminated into what it has culminated in the judgment.
Yes, I think, what is interesting here is the judge has stepped back and looked at the transaction as a whole and said, wait a minute, I'm going through all of this and saying, I think based on this there is a assured return. Now, one of the pieces here is the fact that an Indian company has invested in OCDs of another Indian company.
Yeah.
And where is the assured return to the foreigner coming in there? I think as Abhijit mentioned, over time, and certainly today, if you ask me, can an Indian company which is foreign owned or controlled invest in OCDs, I would caution and say no, I don't believe it's appropriate. And I think it's certainly not something which the FIPB would look view favorably. But I think at that point in 2009, there were different views out there. So I think that's one thing. And I think the second thing, even if the Indian entity itself is it really, ultimately in its equity share capital was 10% owned by a foreigner and 90% owned by residents in India. But there were CCDs out there which gave the foreign owner effectively 99%.
Yeah.
I think again at that point you had to test it, figure out in 2009 what were people thinking about.
If you had to sit in judgment of this in 2009, would you say that this is an unlawful structure?
So I think if you're looking at what happened in 2009, I think at that point it would be debatable, I would say. I think there were it wasn't clear, and you could see people taking a view that it's an investment by a company into another Indian company. It's in the form of OCDs. We don't think that's talking about you're not looking through the whole structure.
You said looking through the structure, and that's interesting because that's exactly what the judge has done, right? He's used the Vodafone Supreme Court decision to say, look, you've got to look at the transaction in entirety. Again, I don't know, on appeal, how would a court look at the fact that they were looking at the transaction in entirety, that the justice came to the conclusion that Vinca is only a colorable device?
It's a trial-level question of fact and law, and therefore it will be decided. But the fact is, if you see it in entirety, certainly it looks a little bit close to the wind. But I think it will be dissected on segment by segment. Is it an owned and controlled company? So while the judgment traverses upon it, it doesn't pronounce on it. Because today it's only 10%, 99% is on conversion.
Yeah.
Then there is 2-2 board. Then there is a veto item. Because if it's a clear Indian owned controlled company, then you have to view the downstream investment in that context.
As Indian, in that sense,
yeah,
right?
So I think there are a lot of aspects of this fact pattern which
will emerge only in trial, so when it gets into detailed arguments.
If you sit back and look at the entire thing, yes, you can say there is, you should question it at least.
Okay. Sandeep?
When you look at what the judge was doing, looking at it overall, quoting Vodafone, I think it's certainly something to pause, and people should be looking back and trying to say, okay, what we've done in the past, is somebody going to be able to pierce through everything and take a conclusion that this, I think, just on the feel of it, based on all these facts, you may have individually been fine, but overall this is what is happening. I think it's certainly of concern now.
But the principle is not new. What this tells us, and all the investigations that have happened prior to in different spheres, tell us that now probably the time has come where we look at the law in words and in spirit.
There are several dozen such structures, Abhijit, and I'm sure that there is not a lawyer in this country who can, literally say that I have not suggested such a structure to a foreign investor or, in representing a promoter, right? And it's very difficult to bat for any of these questionable structures or colorable devices, even if you're amazed at the fact that here is an Indian company saying, look, I'm arguing in court that I raised funds in an illegal way.
But I mean, if ultimately you're looking at a defense in terms of, whether it is, in this case, payment of money, and that is a valid defense, a court can look at it and say, yes, I agree, which it has, then wouldn't you as an Indian company raise it? You're getting into right-wrongs.
I'm not getting into right-wrong. I'm just amazed at, here is Hubtown, who raised this money, 481 crores, in 2009, designed this structure, gave the foreign investor all the rights that it wanted to, and today is arguing in Bombay High Court saying, I won't return the money because the structure is illegal. And they are not the only ones to do this. There is a common joke on call and put options saying every time a foreign investor exercises a put, the Indian promoter calls RBI and says, look, is this allowed or not, right? So I'm just saying,
Yeah, but I think we are jumping the gun, because I think we are also extrapolating out of the judgment. The judgment also talks about a Videocon case, where it clearly says that you cannot take advantage of your own wrongdoing. It's not held. So therefore, it's a trialable issue. All these issues will be gone at the time of trial. And the question whether one can raise a defense, something which, as Sandeep said, that both parties knew about, is a question at large just now.
Well, I'm sure there are dozens of companies that are doing pretty much the same thing to their foreign investors. So this is going to be a closely watched case. Thank you very much to both of you for joining us on the show. With that, we're going to take a quick break. But when we come back, how India's Whistleblower Protection Act offers less protection now.